Hello everyone, welcome back. This is Jeff from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market witnessed intensified volatility, with steel consumption showing resilience but facing continued uncertainty around the recovery in demand heading into September. Steel production remained elevated, which supported raw materials but further squeezed steelmaker margins, which positively supported steel prices during this time. Although market confidence for a potential demand increase during the upcoming peak season remained relatively weak, several domestic and international macro events lifted sentiment over the past week. Notable among these were rising expectations for U.S. Federal Reserve interest rate cuts, Shanghai's easing of home buying restrictions, and the circulation of draft documents outlining the work plan for stable growth in the steel industry. Although total steel inventories rose slightly, apparent steel consumption unexpectedly recovered, reflecting the resilience of downstream demand. In particular, increased domestic manufacturing orders, along with continued marginal improvements in capital availability at construction sites, have supported demand. Meanwhile, although firm raw material costs have eroded steelmaking profits, overall profitability among domestic steel mills remains healthy, reducing their willingness to cut production. As a result, finished steel supply has continued to increase, leading to inventory accumulation over this period. With the imminent implementation of environmental protection-related production restrictions, more construction projects in the regions surrounding Beijing are expected to be suspended. As a result, divergent trends are likely to emerge between long and flat steel this week. Production from both mini mills and integrated mills declined slightly due to shrinking margins, though overall production cuts remained limited last week. Raw materials outperformed finished steel, supported by the still elevated hot metal output. Notably, the 8th round of coke price hikes has been initiated amid a tight supply-demand balance. Average daily coking output has dropped significantly due to environmental restrictions in the Beijing-Tianjin-Hebei corridor, reaching the second lowest level of the year. Despite this, coke plant inventories have edged up slightly as steel mills reduce procurement in anticipation of short-term production restrictions. Additionally, regional transportation restrictions have also further slowed the delivery pace of coke. The iron ore market recorded price gains, supported by a decline in total portside inventories, which was primarily due to a sharp reduction in arrivals last week. However, more substantial production cuts are expected this week around the National Military Parade, which may place short-term pressure on the iron ore market. The anticipated production curbs related to the upcoming military parade, combined with speculation surrounding the previously mentioned work plan for the stable growth in the steel industry, are expected to lend support to steel prices. However, the key uncertainty remains whether domestic downstream sectors can stage a recovery upon entering the traditional peak season, a prospect that remains uncertain. Raw materials are expected to see fluctuations with falling demand, but healthy sentiment. Thanks for tuning in to this week's China Ferrous Market Update. We will see you next time.